Hello traders, welcome back to another video. And in today's video I'm going to be sharing the smart money trading plan step by step. I'm going to be explaining how to apply the smart money concepts. I'm going to be sharing how to find the best trading setups, and also I'm going to be back testing on the real charts. Okay, so if you're interested guys, see you after the intro. Step number one, analyzing the market structure. So when we analyze the market structure, we want to find the direction and key levels. All right. So we want to find out if the market is in an uptrend or the market is in a downtrend. All right. Because we want to be trading with the dominant trend. All right. Let's move on. Let us look at this chart right here. This is US 30 on 4 hours time frame. When you're looking at this chart, you can clearly see that the chart is in an uptrend, okay? And we also see that market is creating higher highs and higher lows. And the trend is further confirmed by breaking the structure. We see that market continues to break the structure going to the upside. All right. So we see that the market has changed direction going to the downside. Now the question is, why did the market change? All right. Why did the market suddenly just change direction? When you look here, we see a change of character. A change of character is a signal that an uptrend is coming to an end. Okay. It is a signal that the sellers are now stepping in. That is why it's called a change of character, meaning the upward movement is coming to an end. All right. And now, why do we say this is a change of character? We say it is a change of character because we're looking at the low. We're looking at the low between two consecutive highs, right? When you look at the top, you see that's high number one and high number two. So these are two consecutive highs, and therefore the low from the two consecutive highs is our change of character. When price goes below this area right here, it gives us a change of character, and from there we see that market retraced just a bit and then started dropping. All right, so let us continue. Let's look at another chart. This is US 30 again on 4 hours time frame. From here we can clearly see that our trend is a downtrend. The market is in a downtrend, and we see that by a series of lower highs and lower lows. And again we see market breaking the structure going to the downside. Okay, so and again you see there's a change of character right there. Now the question is, why did we mark that area as a change of character? Again, you look at the bottom, you see two consecutive lows. You can see these are two consecutive lows, and therefore once price goes above this area right here, we then mark it as a change of character. This is a signal that the downtrend is coming to an end. This is a signal that the downtrend is coming to an end. It's a signal that the sellers are losing momentum and the buyers are now stepping in. All right. And from there we can see that price has came back to retest and then pushed all the way to the upside. All right. Let us move on. Let's look at gold. This is gold on a 15 minutes time frame. When we're looking at this chart, we can clearly see that this is an uptrend. All right, it is an uptrend. You can see a series of higher highs and higher lows, All right. So down here, we notice a change of character. Look at the two consecutive highs and the low here. When price breaks this low, we mark it as a change of character. What does this mean? It means that the buyers are losing momentum and the sellers are now going to step in. Okay. And we see price going to the upside here, just going to retest, and then we're expecting price to drop from here. All right, and we can we can place our orders right then because we see a change of character, and therefore we're expecting market to start changing direction and start dropping to the downside. Okay, and let's wait. We see that price has respected our change of character and went all the way to the downside as predicted, guys. Okay, let us move on to step number 2. Okay, so in step number 2 we're going to be discussing the key concepts of smart money, which is identifying the fair value gaps, the liquidity areas, and trading zones. All right, so we're going to be starting with the fair value gaps. All right, so look at the chart. You can clearly see our fair value gaps, right? So fair value gap is simple, guys, just a gap between three candlesticks. All right, and the market most of the times will come back to test our fair value and then continue going to the upside. Okay, the next is liquidity. US 100 on 4 hours time frame. Okay, so let's focus on this area right here, right? So we notice that price has rejected 2 times. Then we see the price rejected here and then rejected again here. So normally as a day trader, I would expect price to reject from this area right here because clearly I've seen that the market has rejected from the first touch, second touch, and so since this is the third touch, I'm expecting price to actually reverse from this area right here, meaning I would normally place my orders right there. Okay, and we notice that price went all the way to the upside. Okay, so liquidity can be areas where most traders would place their orders and stop losses. Okay, so price will take out the liquidity first, gather momentum to push to the right direction. So it's either you identify liquidity or you become liquidity yourself. All right, so let's continue. All right, so here also we notice that price rejected once, rejected again from this area right here. And again, this we can identify this as liquidity, right? Because we notice that price just disrespected this area right here and just went all the way to the upside. Okay, all right, and again guys, so liquidity can be a swing high or swing low, right? So your swing high and swing low are also liquidity areas, you need to pay attention to those areas as well. So here we see a swing high here. We can also identify it as our liquidity. All right. So let's move on. So down here, we also notice a change of character. Okay. We notice a change of character here. And therefore, we know that the upward movement is coming to an end. And we're going to expecting sellers to start stepping in, pushing the price to the downside. Okay. So here we see a small correction to the upside. I noticed that price rejected from this area before, and now price is here correcting into this area, and I would expect price to reject from this area and continue going to the downside. And when you're looking at this chart, it looks nice, it's convincing, that price is gonna drop from here. All right, and you place your sell orders right there. You enter the market with your sales. Okay, and then what? You notice that price went all the way up and then continued going to the downside. So here's the thing, your direction was correct, just that you need to identify the liquidity before you enter the market. Okay, you need to identify that this might be a liquidity area. All right, and therefore you need to be aware. So we see this area right here was a liquidity grab. This area was a liquidity grab because a lot of orders are resting there, a lot of orders and stop losses. Okay, a lot of orders and stop losses, and therefore the price has taken out the liquidity, and after taking out the liquidity, price started dropping. The price started dropping. All right, let's move on. So this is gold on a daily time frame, and looking at this chart, we can see that gold is in an uptrend. We can clearly see that gold is in an uptrend, and right here we notice a very nice fair value gap right here. We mark it. Okay, and then on top right there I notice a liquidity area, and the reason why I say this is a liquidity area because I see that price rejected once from that area and also rejected again with this wick right here. All right, meaning most traders might actually enter the buys from here, might enter the market, but we are smart money traders. We want to wait for the price to take out the liquidity first, and then tap into our fair value gap, and then that's when we're going to look for our entry model. That's when we're going to look for entry. So for now we're waiting for price to actually mitigate our fair value and then push to the upside. So from here we see that price has mitigated our fair value gap. Okay, and we need to go on a lower time frame to get a better entry. Okay, and now we are on step number 3. We are on step number 3, which is confirmation and entry. Confirmation and entry. We have identified our fair value gap, we have identified our liquidity on a higher time frame. Now we are on 1 hour's time frame, and we want to get a better entry, guys. We want to get a better entry from the lower time frame. So we want to get a better entry from the lower time frame. All right, so from here we notice that price has mitigated our fair value gap, and what we want to see is a change of character before we enter the market. All right, we want to see a change of character first before we enter the market, because a change of character, it is a signal that the short-term downtrend is coming to an end. The short-term downtrend is about to change. All right, let's wait. And from here we notice that price has went all the way to the upside, giving us a change of character right there. All right, and from here we know that we could expect price to kind of retest and continue going to the upside, but we need confirmations. We need something like fair value gap or an order block. So we need to enter at an order block or a fair value gap. So when I'm looking at this chart, I do not see any fair value around this area right here, but I notice an order block right here. Okay, so I mark the order block, and meaning that I can place my buy orders right there, targeting the high, targeting this high right here. Okay, waiting for price to come back to this area, activate my order before continuing to the upside. All right, See, okay, perfect. And from here we notice that price has actually tapped into the order block and activated our buy order, and this would have been a very successful trade. So these are the smart money trading strategy step by step, guys. You start on a higher time frame. You need to identify the market structure, whether you are in an uptrend. If you are in an uptrend, you are looking to buy the market. If you are in a downtrend, you are looking to sell the market. In this case, we are in an uptrend. Therefore, we are looking to buy the market. Okay. And the next thing is to identify your key levels. You need to identify your fair value gap. You need to identify an order block, something that can help you to enter the best trade possible. And from a higher time frame, you then scale to a lower time frame. You get more confirmation, so you need more than one confirmation to enter the market. And as you can see here, guys, this would have been a very successful trade right here.